So you're looking to expand your business and you want to understand which loan options are the best for you? Well, you're in the right place. In this video, I'm going to talk about the 6 core business loan options that you should consider if you're looking to expand and grow your company. The reality is, if you're watching this video, everyone watching is going to have a different situation, a different opportunity where they want to use a loan to grow and expand. The product that's right for you is going to be really different, really for everyone based on that opportunity. So I'm going to cover as much as I can, very high level. So first up are banks, right? Banks have gotten harder and harder to work with. Obviously, you know that. It's probably why you're watching this video, because you're frustrated with banks. They want a lot of cash flow. They want a lot of profitability. But most importantly, they want collateral and assets. They want B2B receivables, they want inventory, or they want some other collateral like real estate or heavy machinery. Now, if you have all those things and you're profitable, bank might be an option and could be a great resource for you to use. A lot of times what we're seeing is banks want to do deals that are $10 million and higher today. So if you have an opportunity, you only need $500,000 or $1 million or $5 million bucks, it still could be a challenge at a bank. Or maybe you are able to get money from a bank, but you still need more. And there's things where you can finance other stuff behind the bank that are out there and available today. So if you're profitable, you got great collateral, great assets, a bank may be a great option, but probably going to look at a 3 to 6 month process. And if you don't have time for that, there's other options that are available. If you're looking to expand through acquiring a business, I'd recommend looking at an SBA loan. It's a 10-year repayment option. The SBA is going to be a long process. We have it down to about 60 to 90 days. Most of the time working with SBA lenders and banks, it's like a 6-month process. I've even heard longer. So you want to make sure that you work with the right group on this. Otherwise, it can be a really lengthy process. So next up are business lines of credit or revolving lines of credit. Now, there's really 2 ways these work. One, with assets. What lenders are really looking at are for high quality B2B receivables. So if you're selling products to good companies, other businesses, big box retailers, Target, Walmart, things like that. You have inventory on hand, you have heavy machinery. You can use a line of credit that can secure against all that stuff. It's okay if you don't have that stuff. If you're a business that's selling direct to consumer, you don't have B2B receivables, you don't have inventory, all good. It's just going to purely work off of your cash flow. Now, there are line of credit and revolving products out there on the market today that will purely look at your cash flow. Now, that product is really great if you're constantly buying and selling, constantly buying and selling. You want some working capital for a rainy day. You think you may have an opportunity, you're going to need some money fast to execute. You want to have that line of credit on the sideline. Great option. But if you're doing specific things that you want, like a length of a repayment, 12 or 24 months to repay, then you might want to look at a term loan option over a line of credit option. Now, there are term loan products out there, some that use assets, again, the same assets that I mentioned, but then there are also term loan options that don't require that and will purely be based on your cash flow. If there is collateral and things like that, some of those options can go out 2 to 5 years. Without collateral, it's just using your cash flow. The terms are typically 12 to 24 months. And those are really great products and tools where you know what your monthly payment is. You can finance things over 12 and 24 months. You can buy more, expand, hire more people, buy more inventory, purchase maybe another location. And some of those term loan products you can use in hand with other lenders, or even if you're with a current bank and don't want to pay that off. So there's some unique things that you can do there that business owners usually don't understand. Next up is equipment financing. Now, this is so underutilized by business owners, it completely blows my mind. If you're a business that is equipment heavy, so construction, manufacturing, transportation, you could even finance all of the racks in your warehouse. Right now, we're working on a $7 million transaction for the racks in someone's warehouse. Who would think you could finance that stuff? And you can finance that stuff for over 5 years with really low rates. You can also finance the tractor trailers if you're in transportation. If you're in manufacturing, all the manufacturing stuff in your equipment. If you're a restaurant, you can finance the chairs, the tables, the signage, all the equipment that's in the kitchen. All of that stuff is financeable. So there's such a wide range where any piece of electronic equipment, tables, chairs, furniture, all of that stuff is financeable, including vehicles and big heavy machinery and yellow iron. I practice what I preach. I use equipment financing to finance my whole office. Like, why wouldn't you do that? I wouldn't want to lay out my cash. Basically, with an equipment financing, you can usually finance stuff over 5 years. You don't have to lay out any money out of your pocket. Usually can finance 100% of that equipment and then still pick up usually all of that depreciation. I'm not giving tax advice. You should speak to your accountant. But what a lot of business owners do is they use other people's money. They work with an equipment lender. They finance all of their equipment. You can choose to depreciate all of that equipment this year or over the course of 5 years. So you get the benefit of preserving your cash. You get the benefit of depreciation, reducing your tax bill. And you can finance that over a long period of time. The other great benefit, and why it's a very underutilized tool, is when you finance equipment over 5 years, the collateral and the lien filing is against that equipment, but you've left the rest of your business opened up. So you can use these other working capital products like term loans or lines of credit separately, because the lien, when you do an equipment deal, an equipment lender is usually only against that equipment. So the beauty of that is if you need to buy a bunch of trucks or a bunch of yellow iron or manufacturing equipment, let's just say that's $1 million. You can finance that $1 million with the equipment lender, but then still work with another lender for a line of credit or term loan product. Now you can probably access, in some cases, double or triple the amount of money, and you can really leverage your business super efficiently to grow and scale faster. Where I see a lot of times business owners use lines of credit or term loan products to buy equipment, where you should really be separating those two. Super important. Happy to talk through that further. Check out that link below. You could speak with my team about this. But these are really important tips and tricks that you need to know as a business owner. The other thing that's important is I see so many people pay cash for equipment, then they're in a cash crunch and they want to refinance equipment. Usually when you refinance equipment, the terms aren't as favorable. It's much harder. Not a lot of lenders like to do it. It's not easy. So, it's so much easier to buy that equipment up front with an equipment lender. So before you just run and go do this, you really want to speak with an expert and advisor that can talk through and map out all of these situations. And then lastly are revenue-based products. There's some great products today out in the market, and there's some really good lenders that have some revenue-based products that are purely based on your revenue and cash flow of your business. The terms are very flexible. They're nowhere near as strict as a bank. A lot of these lenders can move very quickly. Just like in all lending, there's good and bad lenders out there. So whoever you're going to work with, you want to make sure that you do the research on them, make sure they have good reviews, and there's information about them online. If there's no information or there's bad reviews, buyer beware, and go work with someone else and do yourself a favor. And then just as I wrap up here, what's really important with working with all the lenders is that you need to know your opportunity. What are your expansion goals? How much money do you really need? You want to make sure that you borrow enough money. You don't want to underborrow and put yourself in a bad situation. You want to make sure that you understand the interest rates, the cost of capital, what the payments are, and make sure that your business can afford it. And just know your numbers on your opportunity. Put some pen to paper, take some time in doing this. A lot of times I see business owners get caught up in what the cost of capital is, that they actually forget of how much of an ROI that they have in their opportunity. And a lot of times, if it's a really good growth opportunity, the ROI will exceed the cost of capital and it'll make a lot of sense to do the deal. Even borrowing money at higher interest rates in this environment is still cheaper than giving up equity in your business. And most importantly, which a lot of business owners don't think about, is if you're growing your business and getting it to the next level, driving more sales, growing more profit, your business is more valuable. So don't forget, if you get your business from 10 million in revenue to 20 million in revenue, or 5 to 10, how much more market value did you create? If you have further questions, check out that link below. Get connected with my team. They're super knowledgeable. They're really helpful. They'll help you understand what option or multiple options may make sense for you and your business. Thanks for tuning in to Grow by Joe. I hope you appreciated the video. Keep growing and keep doing what you're doing, and good luck with growing and expanding your business to the next level.